Welcome to today's Morning Report Charts Appraisals on Thursday, 16th of November, with me, Richard Perry, market analyst at Hantec Markets. We've got a little bit of a dollar rally going on in the last sort of 24 hours. And that has been driven by the better than expected CPI, or core CPI in the States. We've seen a little bit of a rebound on that. And the question is it just a rebound that's going to get sold into? Be interesting to see, because a lot of these markets that I'm going to look at today are sort of at key inflection points and key crossroads that could potentially mean that this little uptick in the dollar could be a chance to sort of come out again, because it certainly looks the dollar. There's been a shift in sentiment against the dollar. Now, Treasury yields, I think, are key to this. Now, what we have seen is the 10-year Treasury bouncing quite sharply today, as you can see, back to 2.36%, having been 2.32% yesterday. Is this move going to be sustainable? Tax reform in the States is key. The Republicans are sort of trying to drag in Obamacare, or a key mandate of Obamacare into this tax reform, and it's not going to be a very easy process to get this through. Only needs two senators on the Republican side to vote against it, and tax reform would be again not going through. So yeah, this is interesting. But we have seen a bit of a bounce in Treasury yields today, which has helped the dollar rebound. But the spread between 2s, 10s, the yield curve flattens, 64 basis points now, as that yield curve continues to flatten. So that is impacting, I think, or that is certainly an impact on market sentiment, as we've seen equity markets which are being dragged lower. Now, we have seen a bit of a rebound on European markets today, as Asian markets have rallied overnight. But again, is that a sustainable move? Is this going to be continued? I think it could still yet be a bit of a selling opportunity. So you've got lots of key factors there. We've seen gold, which sort of still remains range bound. But as you can see here, basically that little dollar rally is not really doing a great deal. Although the safe haven plays, it's interesting, the safe haven plays, which had been benefiting from that dollar correction, are sort of performing a little bit better today. Sorry, a little bit worse, certainly on the yen and the Swissy. But Swissy is my chart today, so I'll talk you through that in a bit. But data points today, we've had UK retail sales early doors today, and it came in, well, I was going to say ahead of expectations. Yes, slight beat on expectations on the ex-fuel basis, but 0.3% negative was the lowest retail sales data since March 2013 on the ex-fuel. So that's not, certainly isn't great, and it certainly reflects, I think, the issues that the UK economy has with Brexit and inflation. So yeah, it's a real problem that we are starting to see now in retail sales. So this afternoon, well, actually before this afternoon, we've got the final reading of Eurozone inflation, 0.9% and 1.4% on headline and core is the expectation there, and then they are sort of reiterating what they had as the flash reading. Now, this afternoon we've got weekly jobless claims expected to be 235. Again, very, very close to where it was last month. The Philly Fed Business Index. Now, this is interesting because we saw the New York Fed Manufacturing missing quite significantly yesterday, or was it the day before? And this sort of puts a little bit more focus on the Philly Fed number, so watch out for that 130. We've got the industrial production numbers, 0.5% positive on the industrial production for the States, and also capacity utilisation, 76.3, which is slightly better than 76.0. So a couple of factors there this afternoon, but yeah, it'd be interesting to see how the bond yields move today, which will drive the dollar. Now, my chart today is the dollar Swissy. Now, dollar Swissy has been in this correction phase. A couple of negative candles, downside break, forming lower highs, low lows. We've had this rebound though, and is this rebound going to be sustainable? Well, I'm sort of going to say that you've got a near-term sell zone. Basically, we are back to that the old support of that candle, 99.20, basically bang on that now, up towards these old lows. to 99.50. So 99.20 to 99.50 is sort of a near-term sell zone. And I suppose if you did a little downtrend, it's not a million miles. Okay, let's do it off that one. Not a million miles off that, is it? So yeah, just wait to see this rally. If it sort of starts to break through that trend of lower highs, then maybe you could start to see a sustainable rally. But to be honest, I think that the dollar is in a bit of a sort of a correction phase now, and that subsequently, I think we could see the market being dragged lower on dollar Swissy. Now, what we have got is this hourly chart, which again reflects this really. So look at the market since it sort of started to turn lower. The hourly RSI has failed consistently around this sort of 60 to 65 area. It's basically there now. Hourly MACD lines, look at that, failing consistently around neutral. They're about there now. So this is a rally into resistance and at opportunity levels on the momentum indicators. So yeah, this it'll be interesting to see if the market does start to roll over. Now you've got a bit of a support in place, 98.75, and that is above 98.45 as that recent low. But yeah, it'll be very interesting to see if how the market reacts to this rally on the dollar today. So I wish you good luck in your trading today. I'll speak to you later. Thank you.